And I've got a trade I'm going to share with you. I think I'll do it. Let me think about it. I think I'll do it at the end of our recording today. So, Jonathan, you need to call me at the end of that, and I've got a trade. I think you're going to like it. Uh, Over the weekend, I figured it out. I'm doing a 101 with Joe Lease today, and I gave it to him. It's about as good a trade as I can come up with over the weekend to do on Monday. So you got to hang around, and then Jonathan, you need to call me for me to give it to
Sounds good, Tom. I will do that.
you. Yeah, because I think it's such a good trade. I want to share it with everybody here that wants to take it. It's a good trade. Jonathan, I guess our silver wheel trade went off. Uh, Very happy about that. And as we said here, there's a high degree of risk in trade. You know that past performance is not indicative of future results. Another trade we did, I forget where we did this one in the diamond, looks good. Jonathan, where did we do that trade? The diamond trade.
You must have been doing the diamond trade with somebody one-on-one, but we did. So I don't have record of that one, Tom, but we did book a trade for a weekend side hustle on the XSP.
Well, you got to love that.
And we booked a trade on the QQQ for the one ticker payout, folks.
Goodness gracious.
So, yeah, as Wendy said, it's been a good morning. Been a good
Yeah,
morning.
that's pretty good for a Monday. I love it. I love it. Orion paid two according to Neil QQQ. So
There you go.
we got it cranking. All you gotta do is listen. Joe brought me a shirt. I thought it was great. It I'll reach around here and read it when Chuck's covering his news and read what it said. He bought me two actually, but the one I'll read is one I really like. Okay, so that'll be good. Uh,
Hey,
but
plus
not indicative of future
Anchor trade
results.
hit off last week too, Tom.
Say what now?
Thursday or Friday last week, Anchor trade gave us a winner too.
Oh yeah, absolutely.
Good.
Hitting on all cylinders.
Yep.
Hey, and we hadn't even got the trend solidified for the month yet. I gave you a pivot number today of 65. Uh, I'm going to turn it over to Chuck, and while he's doing that, I'll pull out this T-shirt. You'll get a kick out when I come back.
Okay, just a reminder, previous slide. There is always risk in trading, and you got to make all the right decisions. You and you alone are responsible for the decisions you make. Past performance not necessarily indicative of future results. So let's look at that news that we've gotten. A couple things. Number one, ATR on the E-mini S&P futures. For those of you who have roadmap software, you'll see it's sitting at 113. Just beneath that is the ID number 1.63. Now, 1.63 is basically it's kind of a percentage level, gives you an idea of how aggressive a market is. 1.63 for a stock is actually pretty good. For an index future, that's a lot of distance between numbers. It's a very wide market. So we want to be aware of that wide market environment in the market. And likely could continue a little bit as we move on through. We're looking for the market to maybe calm down a little bit. Always great to take advantage of the moves. And the reward there is great, but anytime you increase reward, you also increase risk. And we at DTI tend to be a little bit risk adverse. And I'm sure Tom's going to tell you about some of the trades he's looking at and the way he controls risk in approaching this market or any other like it. Now, we do have big news this week. We've got the employment situation reports. It is delayed. It was supposed to come out on Friday of last week. It'll be coming out this Wednesday. So there's going to be a lot of attention paid to that. Kind of a midweek news item here that's typically at the end of the week. So we'll see how that impacts the market. And then on the earnings calendar, it's still a full earnings calendar, but there aren't those big names. I think Coca-Cola is reporting this week. That's one of the bigger names, or one of the more familiar names, I should say. There are a bunch of stocks that you guys might be interested in. Make sure you check out your earnings calendar, but I don't believe that any of the Mag 7 are reporting this week. So quieter, but still full. And then the other thing, and I found this interesting, Tom, the Olympics, typically the Summer Olympics, markets go up a little bit during the Summer Olympics. Winter Olympics, we go up to the Olympics, and then you might have kind of things stabilizing or even pulling back a little bit during the Olympic event. Not really something we think of as a factor in the market. It's not really economic in nature, but it's just a matter of where the eyeballs are going. So we'll see how that plays out. And don't forget, if you're thinking, why would the Olympics affect anything? Um, this is why sponsorships exist. People like to put their names on events, be sponsors. Why? To call attention to their product, which in our case, we're looking at how that affects the individual stocks. So, an interesting little tidbit there with the Olympics going on. The Winter Olympics in Cortina, Milan. Is that it? I'd have to check that out just to be sure about it, but they're going on at this point. Let's go ahead and move over to our next slide. We're looking at Tom's opinion for the market. And Tom, you kind of gave us your opinion straight off the bat. Have you got anything to add?
Yeah, I think that the market, that turnaround we had last week, like I said, I think it's going to be justified. You're going to see the market go higher once we take out the 7,000 range on the S&P. Right now, you look at the day to day, you got a positive reference bar, you got a positive number above my pivot number. Everything's positive right now. What I'm talking about, if the market stays at the top end of its range, you're probably going to see higher prices. I looked at the Traders Almanac this week, and this week is typically a very good week. And it seems to me like we've got the wind behind us after that turnaround last week. And so I think that what you have to do to take advantage of that is go with it. And there's certain things that I would do, which is the reference bar approach, to go with it. That's my opinion.
All right, thank you, Tom. And if you want to get more of Tom's opinion, make sure you be on the lookout for the T-Buzz weekly trade letter. It'll be released Monday after the close. So coming up pretty soon. If you're not signed up for that, make sure you go to dtitrader.com/weekly. 1 year access, $9.99. You get that broad market update, key news events for the week, earnings to watch, weekly Magic 5 stocks, and of course, special opportunities. If there's anything out there that doesn't necessarily fit what we normally talk about, we'll look for a way to talk about that. So make sure you go and grab that. The release is after the close today. So typically after the close on the week start. But in this case, week start is Monday. So after the close on Monday. Now let's go ahead and get into train and trade here. Monday through Friday in the month of February at 11 a.m. Eastern. And just a reminder that all trades in train and trade are tracked through the T-Buzz Talk and Trade channel on Telegram, dtitrader.com/TNT to follow along there. And a couple resources to go through when you're trying to keep up with what's going on with these markets, what's happening. Number one, take the time to read Tom's first book, Winning the Day Trading Game. There are several other books out there that Tom has written that I would encourage you to go and check out, but make sure you read Winning the Day Trading Game. It's a great introduction to trading and how markets progress. And if you really want to understand some of the lingo, it's a good way to go and get that done. We do have little cheat sheets though, the DTI white paper booklet, white papers on many of the big topics that you should be looking at. Don't forget to follow along at Tom's YouTube page. We are live on YouTube right now. Hello world. And of course, important terms to know. The penalty tape, which Tom loves this one. It's from a presentation that he did many, many years ago, really talking about the market and just kind of pulls everything back to get back to the basics. He calls it his penalty tape because when he gets outside and sort of loses track, goes back to that tape, puts himself in the penalty box, and gets back on track with the things that matter. So that's what the penalty tape is all about. Get you back on the track, back on that beaten path. And of course, don't forget about the options playbook if you're interested in learning about that. Okay, so Wednesday of this week, we have important news. We've got the employment situation reports that come out. Many people refer to this as one report. It's actually a collection of different reports that we simply call the employment situation reports. Among them, and you'll see this is the release from January 9th. It was for the December numbers. We have non-farm payrolls, right? That's one of the big ones. That's what a lot of people talk about. Prior read 64,000, prior revised to 56,000. Consensus range there is pretty wide, 40,000, 100,000. We ended up coming in at 50,000, so it's a little bit below the prior revised number. The unemployment rate, that's one of the big talking points for everybody out there. The prior read, 4.6%, prior revised down to 4.5%. We come in at 4.4%. That was the number we were looking at in January for December. Now, when we get to private payrolls, manufacturing payrolls, that's all part of the non-farm payrolls. But come down to the participation report, which is another report that comes out. The prior read on that, 62.5, dropped to 62.4. This tells us how many people are involved in the workforce, participating in the workforce. And the larger that number is, you got more people getting involved in the workforce. That might actually increase with the unemployment rate. In this case, it dropped, and so did the unemployment rate on the last report. So we'll see how that affects the next one. Average hourly earnings month over month, year over year, and work week. Those are basically statistical numbers. They're nice, but they don't really define the market for us. So statistics are great if you want to use them, but I'm going to stick to mainly for me, Tom, it's the unemployment rate and the participation rate. That's how I judge things on these particular reports. So let's go to what we're looking at for Wednesday. What is Wednesday expected to be? Non-farm payrolls are expected to come in higher, but the consensus range on that is still very, very large, 40,000 to 105,000. There could be a lot happening there. The unemployment rate is expected to remain steady, but could move up a little bit or down a little bit. So we'll have to see how that plays out. We aren't really expecting anything big on that, which means if you do get something big, that's going to impact the way that we feel about the market. Participation rate, prior read was 62.4%. They don't actually give us an expectation for that, but I'm going to compare whatever we get to that prior read. Is it up a little bit? Is it down a little bit? And is it in correlation with the unemployment rate? So if everything remains the same, 62.4 on the participation rate, we stay at 4.4 on the unemployment rate, that's what you expect. If one goes up and the other goes down, you got to stop and say, whoa, something's going on. Let me research this. So we're going to look to see if things come out as expected or if we get something that might not be quite as expected. That's going to be the big focus here, that participation rate 62.4%, unemployment rate at 4.4%, and of course, where do non-farm payrolls come in after a prior read of 50,000? Okay, so bullet points here. Last month's report, participation rate and an unemployment rate both dropped. Watch the two in combination, and anything within the consensus range is acceptable. Acceptable news might be kind of boring, but if you get outside of that consensus range, if you're doing it in a positive light for the market, expect something big. If it's in a negative light for the market, well, it could still be something big. It just might be in the other direction. So keep that in mind as we go into that Wednesday news report. Going to be pretty big, mainly because it's delayed. So we'll see how that impacts things. And Wednesday, kind of an odd day for the employment report to come out. Again, that is due to the delay, but we'll figure it out as we go. Interesting midweek employment report coming up. So be ready for it. Understand what you should be expecting. Now, let's move on to our next slide, and we're going to get over into the FTD algo and some of the things that we're looking at here. And this is where I bring Jonathan in. So, finding stocks from the DTI method with the FTD algo. And Jonathan, highlighting here Walmart, Apple, GLD, and SLV. I get the metals. Metals have been hot. What is it about Walmart and Apple that piques your interest?
Well, these are stocks from Tom, and we about last month we were talking about Walmart, but during one of our in-person classes there, same room that Tom's in right there on the screen. We're there, I think it was 2023. Walmart was just an incredible stock with the 3-day algo, and it had a little 2024 kind of meandered a little bit sideways, I guess you could say. And then this year started or at the end of, excuse me, I messed up my years. 2024 was great. 25 was kind of sideways market for Walmart. And then at the end of 2025, we started noticing it, respecting that 3-day algo again, and it's continued into this year. So that's why Walmart is in focus here. Apple,
And
what's that?
Apple, we know about some of those trades that Tom was doing what was that, last week?
That's right. Yeah, once it got above the yearly open, Tom taught us that last week. I can use that at any time during the year. It just happened to be last week on Apple. And of course, gold and silver. So let's go to the 3-day algo. Let me get it updated. A live update here. A new stock Tom added today called Sky, SKY. We'll see how it shapes up on the 3-day algo here. Now, you've heard Tom talk about patience on a Monday. You heard him say it's not quite set up for the month yet in terms of, all systems go. And that's because you see there the S&P and the NASDAQ are not above their 3-day algo yet. The 3-day algo on the S&P is 70.27. 3-day algo on the NASDAQ is 26.027. So Tom has refined it a little bit for us to a 7,005 number to start probing the market early. 7,005. Everybody understand what that means? Hey, Morris, I'll copy and paste this link in here for you. This is the spreadsheet. On a month-to-month basis, we want the S&P to open and stay above the 3-day high. Okay? To open and stay above the 3-day high. That is a number that the market has created for us during the first 3 days of the new month. The great thing about that is it's consistent basis. It's consistent basis, that you can follow on your own every month. Sometimes Tom refines it a little bit from a number that the market generates or just his own experience trading the market, kind of like the 45 number. All right, a little bit about that. 70.45 would be a very big number in the S&P 500, just like 69.45. Doesn't matter what the first 2 digits of the S&P are, the number 45 to end seems to be a very sticky number for the S&P 500. And that comes from experience. So little things like that you learn along the ways. We teach you a consistent process that you can use each month with the FTD algo. And then you pick up things in the market along the way. That's what, great thing about having Tom here is that he can give us insights like that. And then that 7,005 insight for this month, might give us a little head start in terms of seeing this market firm up and strengthen up in front of that FTD algo. So we got a probe number of 7,005 above 7,005, and we got more of a clearer skies above the FTD high of 7,027. So let me ask again, does that make sense? All right, and then of course, if we get above that 7,005 and above 7,027, you should expect a little bit of resistance and Tom's first target to be 70.45. All right. Now that 7,005 number is a number that you know about if you just tune in every day. All right. Just tune every day. We can't put everything on the spreadsheet. Spreadsheet is focused on the first 3 days process, but little insights like that, you get snippets that you can use each and every day or every week or whenever they come up. Use with patience. Just simply tune in every day. That's why we're here. Let's cycle down the list. Now, their stocks that we wanted to check on were Walmart. Let's look at Walmart. There it is, green long. Why is it long? The FTD high is 129.49 or 41, excuse me, 129.41. Current price is 129.60, so we're just slightly above the FTD high. It's looking good. What else? Apple. Let's see where Apple is. I think it's up here a ways. Apple needs to get above 278.95. You'll notice that the January open is 272.25. We're still above that. We're above the February open of 260, but we're not quite above the 3-day high. So Apple's looking fine because it's holding this month open. But in terms of establishing a more new trade for a monthly type swing trade, really needs to get above that 278.95 number to have a trend start to set in. And gold and silver, let's check in on those. There's gold looking good above 463.10. It's at almost 466. And silver has not caught up to gold yet in terms of after the pullback. Its 3-day high is 82.80. Current price 75. So silver's got some work to do. And gold definitely firmer than silver at the moment. Now we got some others that are notable. I mentioned Sky, SKY. Let's go look at that. That is
Our page updated.
got a good, it's holding the year open. It's above the Feb open. It's got to get above 87.69 to get above the 3-day high on the algo here for that new stock from Tom. Sky. These other two are new as well. Grid, Sat, Sky. Those are all new from Tom. Let's see what else is long here. Citigroup is long. JP Morgan is long. Those struggled last month, so that's a change. See the change there. Those are looking pretty decent here on the algo. Let's see. Nvidia is long. Pleasant sight there. Amazon, Google short. Golden GDX. Diamond long. From my understanding, we're going to talk about Dow futures tonight at Futures Plus Education. And there's TLT long and Bitcoin short. A few other notables you might jot down just from our afterburner process. FedEx looking pretty good. These are three you should know too. FedEx looking pretty good. LUV is one of the airlines. And Starbucks. Starbucks actually is getting ready to cross that 100 line. And I mentioned earlier about little snippets of insights that you get just from being here. And I mentioned 7,005. Well, Starbucks is about to cross the 100 line. And one of Tom's insights is a stock that crosses through 100 tends to go to 110. So we'll be looking for that in the coming days, hopefully, if it sets up. Now, Tom, I don't know if maybe I missed it, but you had that T-shirt. I don't want to get too far down the road here.
Yeah, let me show you the T-shirt Joe brought me. I'm doing a one-on-one. You can't read it, I'm sure, but it says, if at first you don't succeed, try doing what Tom told you to do in the first place. Died laughing. Anyway, you've heard me say that before when people say, hey, I'm losing money. I said, you need to listen. and learn this process. The process we got is really good. It'll help you, and I think it's great. Okay, so Jonathan, what do you got next? Because I could go on into that trade I was going to do if you wanted to.
Yeah, let's do that. I'm going to take us to a live market.
Take us to a live market, and I've got a chart that Jonathan I'll send you for my silver wheel people today. But okay, there's been a lot of talk about silver, whether it's going to go up or go down. You saw on the 3-day algo for February, it's positive. And I told people after the big, uh, I guess, crash we had silver from 110 down that you had to give it about 14 days for it to settle down. Well, I think it settled down. And then this weekend, I was doing some reading, and I found out that this might be a real good long-term play. Now, I've been long the shares in this process, as I told you, but SLV, if you go out, and I'm going to tell you my thinking, okay? And SLV is going higher, and I think above 75, it's probably breaking out to 78, 80. But let's go look at a live market, Jonathan, and pull up SLV January of 27.
January of 2027. Okay, let's see. All the way down here, Jan 15th, 2027.
Right. Now, my thinking is I want to own the shares, and I got to thinking about putting out, for 1,000 shares, I got to put out 70 something grand. I said, is there a better way using options? And so I worked this up over the weekend. If you look, the yearly open for silver, does everybody know the yearly open for silver? We don't have to leave the page, but if you put it in the roadmap, the yearly open for silver, okay, is around $67, right? Okay. So if you go out to the 67 call for silver, you might throw that in there, 67 call, it's $20.90. And it went to 110 in the first quarter. If it goes to 145 to 150, then I could go sell a 150 call against this. And it takes my price down to $14.22. So that would control, one option would control silver up to $150 a price. I think that's a reasonable expectation if you're thinking if it keeps going up, right? So let's do some math here. Jonathan, if you buy a 67 call to 150, what's your total take if it goes up?
You're looking at a $1,400 outlay and about 6,900 in potential profit there if it gets above 150 340 days from now.
Yeah, which is about is 5 to 6 to 1, if I'm doing the math right.
Yeah. Uh-huh. Yep.
You said over in the top. Hey, hang around. I want to talk to you a second. Okay. So 5 to 6 to 1 is not a bad play, and here's the way it works. How much is the call we're selling up there worth? The $150 call, Jonathan?
It's $6.70.
Okay. If that call stay in it, that call gets less than $1. In other words, due to time, you need to go out, close this one out, and roll it out to the next one. And by that time, you readjust to maybe the monthly open or the using that 67. But if it's 67, let's just do some math here. I like to buy things wholesale. So silver's at 75, right? So 75 from 67 is $8 off the price of that option. That's $6. I think this, when you do it mathematically, I think you're buying silver wholesale with this strategy. And you put it, it's something you put aside and you let it work for you. Because if silver continues going higher, you're going to make money. And really, as long as it closes above 14 over 67 would be $80 a share. If it closes above that, you get your money back, worst case, if it's above 80, because that's what it'd be worth on expiration date. But this is a trade a little bit out of the ordinary. I do this personally a lot. I hardly ever teach it, but it's set up so perfect over the weekend. I said I need to share it with people. And so if you're in my silver wheel, we'll do some things down the road in there later on today. But this is the trade. And Jonathan, I think Joe did it already this morning. I did it already. I'm gonna do another one. I'm gonna build a position over the next week in this position until I get my adequate number I want to hold. Okay.
And Tom, is
So
this going to TNT?
if you're in our TNT room, it'll be followed in the TNT room.
Got it.
Always something special if you come to Train and Trade. You got it from here. Adam's here. We got to get some logistic stuff handled. I hope everybody listens to the recording. And thanks for hanging around. But I think it's some pretty good stuff. Do y'all like me doing some of this I call it off the normal stuff and share it when we hit from time to time. Do y'all like that? Keeps things interesting, doesn't it, when I come up with these off the radar type trades. So take it away, Jonathan.
Sounds good. Thank you, Tom. I was just typing up this trade for the TNT folks. Make sure the screen is sharing properly here. Go back to that roadmap. Maybe it's a little bit better. Screen share. All right, let's make sure we don't have any questions to answer here. Yeah, buying power alignment a little bit on the high side, but that's all right. This is, like Tom said, a little unusual trade from what he normally does, but play it if you want to play it. Let's see, Tom is out of here, so I'm gonna answer as many as I can here. Yeah. Question about I wonder how much you could lose. Well, if you're doing one contract, you can lose $1,400 because that's how much you're paying for it. If you let it go to zero, Tom wouldn't let that happen. So let's go back to the live option chain and review. So this is Tasty Trade. It's pretty cool. It actually tells you what your max loss is based on a 1435 price. Let's lock that in so it doesn't change. Your risk is 1435. If you pay 1435, your profit potential is 6,865. What your risk is what you are possible to lose. Now, if you were trading a 10 lot, then obviously it might be that 14 grand if you were trading a 10 lot, right? I'm going to base this off of one contract. What he says, this has 340 days to expiration. What Tom said is that as the short leg falls below $1, and that could happen one of two ways, or it might be a combination. One, if SLV turns down, the value of that 150 call is going to go down, right? Because the odds of SLV going above 150 would be becoming less and less. So the value of an option, call option, becomes less and less, right? Basic call option stuff. And if that happens, he would roll the strike down. Or maybe just as time goes on, maybe SLV doesn't go down, but as time goes on, SLV, as there's less and less time for the stock to get above 150, the odds of it doing that become less and less. So the value of the call option becomes less and less. Again, all basic option information. If you were to close that out, buy back the 150 call, and depends on where the stock was, but let's say the month open was like 105 or something, he might sell the 115. I'm just speculating here, but he would just roll the call down, right? He would just roll it from 150 down to whatever and pick up more premium. So the basic thought process there is that once this call option, which is currently worth close to $7, a premium working for you, once it dwindles down to $1, there's not much more premium working for you. So you roll it down, pick up more premium. That's what I took from that. You'll have to stay tuned into the TNT program if Tom gives you any more insights. And the link for TNT is dtitwitter.com/TNT. Yeah, Tom made this trade already. All right, folks, it is 11:40, which means we just hit the Genesis reference bar. What is the Genesis reference bar? Well, let me post the white paper again on the reference bar, or the white papers at least. That link is dtitwitter.com/WP. The second or third white paper on that list is the reference bar white paper. You can learn about our reference bar process. There's 7 reference bars during the 24-hour market. If we open this up, you'll kind of notice a pattern here that the market tends to a continuation move or a shift right around the key reference bar times. Here's the opening reference bar. We get below that. The next time the market has a chance to move is the next reference bar. You can see it continued lower. Then we get to RBX, and it stopped the lower movement. Then we get to RB3, and now we're heading up. So the question is, now we're forming this white Genesis bar called the Y bar, RBY. And the question is, will we can see a continuation higher now? Or since we're above all the other reference bars for the day, will we see a continuation higher? Or will this Genesis bar pull us back down? Will we see a reversal? From Tom's insights and his experience, he's noticed that the Genesis bar tends to mark a top or a bottom about 4 out of 5 days. Nothing exact about the number, but about 4 out of 5 days. So more times than not, the Genesis bar in this case would form a top, during the next hour or so. And if it doesn't, it's going to be termed a continuation day, where we can see prices get up to 7,005. All right, so that's what we'd be looking for here. A continuation up to 7,005, because that's Tom's number. And hopefully, the best case scenario, we get above 05 and head to that 27 number. But the Genesis insight is just a fantastic insight on the market. It will work for S&P futures, NASDAQ futures, all your, Dow futures, all your stocks. All about a key time of day when the European markets close down for the day at 11:30, which leaves the U.S. traders on their own to decide where they want to push and pull the markets. And that's why it's called the Genesis reference bar. It's kind of the first time all day that U.S. markets, market traders have full control or where they want to move the market. So that's the Genesis insight. We're going to listen to a review from Tom talking about the Genesis algo. We have a Telegram algorithm for Genesis, which queues up trades on our 7 sisters. Most of our 7 sisters, like the SPY, the QQQ, the diamond, USO for crude oil, GLD for gold. I think it does TLT for bonds. Very neat little algo, which the goal with the algo is to find the continuation days and give us trade opportunities, right? So we don't have to necessarily spend all the grunt work going to find it. We can have an algo that queues it up for us, and then we just have to go confirm everything and trade it if we want to trade it. So let me queue up that video. Thanks again for being here. Thanks, Chuck. Thanks, Tom. You Silver Wolf folks, we'll see you at 1 p.m.